Okay, let's dive right into this. Welcome to this explainer, where we are going to look at the mathematical reality of total financial freedom. Look, if you've ever felt like the idea of never having to work again is just, some fantasy reserved for lottery winners or trust fund kids, you are absolutely in the right place today. We're unpacking a strategy that proves you really don't need multiple millions to escape the rat race. In fact, a single $500,000, if it's strategically invested, can literally be your ticket to complete independence. And hey, if you are a complete beginner starting from absolute zero right now, do not worry. We're going to break this intimidating goal down into logical, bite-sized, and highly digestible steps. Because at the end of the day, it's not magic, it's just math.
Here's our roadmap for today. We'll be looking at 5 areas: the multi-million-dollar myth, the math of passive income, protecting your purchasing power, wealth is about having choices, and finally, small steps to start now.
All right, section 1, the multi-million-dollar myth.
We've all been sold a very specific story about retirement, haven't we? The traditional advice always tells us we need to just grind away at a job until we're 70, penny pinching and hoping for the best, all just to accumulate some massive multi-million-dollar nest egg. And surveys show most people actually believe they need at least $2 million, sometimes even $5 million, just to retire comfortably. But we need to shatter that illusion right now. The reality is there are people out there right now living way better lives than most millionaires, and they're doing it with just $500,000. It's not a secret trick, it is simply an understanding of a fundamental financial principle that most of society completely ignores. You see, you don't need a mountain of cash to slowly spend down until you die. You just need a foundation.
Moving right along to section 2, the math of passive income.
So let's get into the actual mechanics of how this works. How does a $500,000 portfolio actually generate income, and what does that mean for your daily life? Well, it all comes down to passive income, and that means generating enough consistent returns to cover your basic living expenses without ever spending the principal amount. When you achieve this, you effectively become financially immortal. This right here is the absolutely crucial difference between a consumer and an investor. A consumer spends money and poof, it disappears forever. But an investor uses money to buy assets that generate more money. When your money is out there generating your living expenses for you, you no longer have to trade your time for a paycheck.
And this brilliantly illustrates how we actually generate those returns, especially if you're a beginner. It really comes down to 2 main vehicles. First, we have fixed income bonds and high-yield savings. These are your lower-risk, highly conservative options, and historically, they give you about a 5% return. Then, on the other side, we have stock market funds. Specifically, we're talking about diversified index funds here. Now, these carry a slightly higher short-term risk, but over the long term, a balanced portfolio of stocks and bonds historically generates an 8 to 9% return. So just to be safe with our math today, we're going to use a conservative 8.5%.
Let's look at how that actually translates into your real daily life. With our $500,000 nest egg, that 5% yield gives you $25,000 a year. That's over $2,000 every single month. I mean, that alone could cover rent and groceries in a lot of places. But if you accept just slightly more risk with that 8.5% yield in the stock market, you're looking at $42,500 a year. That is over $3,500 every single month in passive income. That covers rent, bills, and lifestyle choices, completely generated without you lifting a single finger. Your money is literally working harder than most people do at their day jobs.
Section 3, protecting your purchasing power.
Now I know what you might be thinking. Okay, but what about inflation? Won't my expenses go up over time, making that $3,500 way less valuable? And it's a completely valid question. The secret to shielding your purchasing power is that you actually don't spend the entire 8.5% return. Instead, you only withdraw about 6 to 7% for your living expenses. That leaves this nice little 1.5 to 2.5% slice of growth inside your portfolio. So, by living on slightly less than your total return, your principal amount is actually growing over time. And as that principal grows, the dollar amount you withdraw naturally increases too, which allows your passive income to completely outpace rising inflation over time. It's brilliant.
Now, this strategy also comes with some seriously powerful built-in crash protection. Because you're only taking that conservative withdrawal rate, and because you're fully diversified across different asset classes like we talked about earlier, you have a massive buffer. During a really tough market year, sure, your overall balance might dip a bit, but here's the thing. You're still generating income through dividends and interest. You aren't fearfully cashing out your life savings at the very bottom of a crash. You are simply living off the returns and comfortably waiting for the storm to pass.
All right, section 4. Wealth is about having choices.
So let's shift the paradigm here for a second. If you think this whole strategy means you have to live like a monk just to hoard cash, you have completely missed the point. This isn't really about the money at all. Wealth isn't about accumulating stuff, it is about accumulating choices. So the crucial point is that when your basic expenses are covered by your investments, you're no longer desperate. You finally have career flexibility. You can quit a job you hate. You can afford to take a risk and start a business or go back to school. Or maybe you just want to travel the world while you're still young enough to actually enjoy it. You are no longer making life decisions from a place of scarcity or fear.
Now, what's really interesting about this is when you consider the alternative costs of our everyday consumerism. Think about this. The average person will spend $600,000 or more over 40 years just buying, financing, and maintaining cars. That is more than our entire freedom number. And look at spending just $3,000 a year on coffee and dining out. If that money were instead invested at an 8% return over 30 years, it would grow to over $800,000. It's crazy, right? People are unconsciously choosing temporary satisfaction over their own permanent freedom.
Which brings us to Section 5, Small Steps to Start Now.
Look, if you're starting from zero right now, $500,000 can feel like this massive mountain that's just impossible to climb. It is so easy to get overwhelmed and just throw your hands up before you even begin. But building wealth is not about making one huge leap. Consistency beats lump sums every single time. It is a mathematical certainty, not a lottery ticket. If you manage to save $2,000 a month, you will hit $500,000 in about 18 years. Now, 18 years might sound like forever, but think about where you were 18 years ago. Time is going to pass anyway, right? And you don't even need to start at 2,000. Start small, scale up gradually as your income grows, and most importantly, you have to build immunity to lifestyle inflation. When you get a raise at work, invest it. Don't just go out and upgrade your car.
So let's give you some highly actionable homework to do right now, today. Step 1, set up an automatic transfer of just $50 a month into an investment account. Just set it and forget it. Step 2, go through your bank statement this evening and cancel those subscriptions you do not actively use. We all have them. And Step 3, choose to cook at home instead of ordering takeout this weekend. It sounds so simple, but every single time you avoid an impulse purchase, you are literally buying back a piece of your future freedom.
I want to leave you with this final provocative thought. Will you look back 18 years from now wishing you had started today? The $500,000 formula isn't complicated, but man, it demands discipline. It requires you to act entirely differently than the majority of society. But the ultimate reward isn't just some big number sitting in a bank account. It is a life lived entirely on your own terms. Your future self is counting on the decisions you make today. Thanks so much for joining me on this explainer, and I'll see you next time.